If the Bitcoin bottom is in, we can potentially see prices crash up to 60%. So how does this occur? When does it occur? What will the price be? Let's try and answer these questions in today's video using objective data from the past that we have on Bitcoin. None of this is opinion. I'll leave that until the end of the video, so make sure you stick around for that. And in the meantime, smash up the likes as soon as you get here. Subscribe, bell notification icon. And if you want to learn more about macro trading and investing, check out the link in the top of the video description for our free crypto and economic report. Or if you want further education, TIA premium memberships are in the link further down on the page. Let's dive in to today's video looking at the potential crash in the market coming up for Bitcoin if in fact the low is in. So I'm going to take a really simple approach to this, looking at potential areas for tops in this rally, potential pullbacks, and what we could expect looking at market sentiment, time, and price for our analysis. Now, straight up in the beginning, my views haven't changed on the market. I'm looking at everything from a macro point of view, but I understand that once markets do start to move, there is the possibility of significant pullbacks. And if I'd happened to bought near the peaks or around those peaks, I have to expect that maybe the market is going to collapse, drop, fall, crash, whatever you want to call it, against me, and what those signals would look like in the market so that I can hold my position steady. Because we know time and time again from crypto and Bitcoin, we can get into positions, we see the market pumping, we're entering as we're seeing some breakouts or we're buying on the dips, but then the market likes to correct. It has to do that every single time. So my position hasn't changed overall, but I am fully aware that markets can have these big corrections. And that's what I want to look at in today's video in terms of how this could happen and where it could happen so I can prepare for it should this same sort of significant move happen, in what sort of time frame as well. So I want to start back early in the piece, going back to 2011 and 2012 as the market was running up from that point. Earlier on from that, 2009, we have the data there that's now coming here. This is a little bit sketchy. You can see a lot of gaps. So I want to start it from about this point, which is where I've done a lot of the analysis from in the past. Because we can see a pretty significant drop here, and there's really no numbers underneath 1 cent. Like, we haven't been able to break this down as to what those prices were just yet. It's all basically zero. Anyway, moving forward from that, the peak coming in 2011 down to the bottom here in late 2011, from memory, was about 93% crash. So there is 93.75%. And so I'm using the Gann swing indicator here with settings at 2 bars, or if you're looking at a candle chart, 2 candles, and this is set to weekly. So these are these yellow swing lines that you can see here. And if you want access to that, it's in the top of the video description, TI Gann swing indicator. It's what I use for all of my trading, entering positions, exiting positions, where I can put profit targets, stop losses, and just to allow me to see where the smart money is buying and selling, and basically giving me those pivot points for when the market breaks out of some of these significant areas, which I'll do another video on in the near future. There's some pretty good data on that coming out at the moment. So we've basically rallied up from this low in November, pushed higher into January 2012, so about 11 years ago now, and this first pullback was about 46%. So pretty straightforward. We had a pretty good run out of that bottom. The run out of the bottom was low to high, 262%, and then a 46% retracement from that point. Now, following these swings, you can see the market headed straight up from that point, and using the swings, it kept you nice and safe in the market all the way up. That's what we'll look at in a future video. But for now, just looking at some significant pullbacks, basically what people would get extremely fearful about. I definitely would as well, with an 80% pullback or a drawdown in your portfolio. And then looking at it in terms of the bounce from there, and then the following pullback from that point. So from the bounce, the market went up about 172%. So we've seen 262, now 172. And the pullback from there was about 51.89. So basically 52% from that peak to the downside, with the in time being 1, 2, 3, 4, 5, 6 or so weeks. Now, these are much shorter periods than what we're currently seeing because the market has changed quite a lot since then, but the movements continue to be quite similar. So fast forwarding now to the biggest bear market of that time, 2014 into 2015. You can see we had some nice clear swing tops breaking down. Now, out of that bottom, so basically the first bottom for 2015, and I say the first bottom because we're using the index here, the Bitcoin index, and it shows up that there was a second bottom here in August, basically a lower low. However, this is the index of Bitcoin, which brings all of the data together that it had at that time, and then give a price from all of the data, not just from one specific exchange. So from that first low to the top, market ran up 82%, crashed 30% over the course of 1, 2, 3, 4, 5, 6 weeks again. Then we know it went sideways from there, moved up again, and then crashed over the course of, I believe it was about 5 or 6 weeks again. So 6 weeks to that next low, which was 48.7. So around 50% low. Now, if I'm only going to use the prices, say, to that second low here in August, or even the closing prices, because remember, this is the index and maybe some of those other exchanges didn't go as low as this low, then we're looking at around 37, 38% to the closes around 28%, pretty similar to what it did the previous time. So around that 30% level. So far we've got 52%, 46%, 30 odd percent, and then another one here at about 49%. Market ran up, broke out of this accumulation period after a couple of bottoms and a couple of tops. So looking at the double tops and the double bottoms, and then put in another 28.5% and moved down. So somewhere around that 30% level. So moving forward, this is the 2017 bull market. These have been measured many, many times before. We can go through it and have a quick look just to the downside because this is in a bull market. That's 40% for the first move. Some of the more significant ones here, that was another 39.5%, so basically 40%. And before the top came in, another significant move to the downside, 40%. So a lot of 40% within the bull market. So for the bear market, we're looking at the times where the bottom was in, market ran away from the bottom, and then came back to crash. So 2019 had the higher low, 2018 December, that was the lower low, so the bottom there, and then the top was June. So the crash from the top was 53%. Market started to run up from there. We had the pandemic crash, so the old black swan event, and that was 63%. So barring any sort of black swan event that we see in the future, which of course is a black swan event, who's going to see that? It's the whole point of it being a black swan, not calling everything a black swan. But essentially barring any sort of black swan, the max we've seen so far is 53.5%. But even with a black swan, look, 63%, that extra bit of dumpage happening there. So this bottom, this is not the bottom, obviously. We've got a 52% drawdown there. But let's look to the bottom. That was a 38%, which then brings us to today's information, the data that we currently have on the chart. So looking at where we are, if this is the bottom, I know I've talked a lot about November most likely being the bottom, but I'm not saying that it is the bottom because we're not far enough away from it just yet. But there are a lot of signals saying that the bottom is in. Let's leave it at that. This is a probabilities game, not a certainties game. If you want certainties, then you're better off going into a 9-to-5 job. And even then, there's not all the certainties in the world. But we're in investing, so there's no certainties. It's all probabilities. Looking at the upside and the downside from here, if we are to drop between that 30 and 60% from the current high, $25,000, 30% would bring us out to about the previous low of $17,500. Maybe there's a spike low from this point to that level. That would be something that a lot of people are looking out for, but maybe that just doesn't come in and this isn't the top just yet. But if we're just looking at this being the top, go 30%, from the top now at 25,000, we come down to 40%. That brings us out to about the previous low. So there it is, 38.5%. 40% is that little bit lower to 14K. If we take it to 50%, then we're looking at 12.5K, and we take it to 60%, then we're under $10,000. And many of you know by now that I've put out plenty of video titles and tweets saying that you could kiss the $10,000 level goodbye. We're currently at a double top. Maybe I'll have to eat my words, but for now, we're anticipating a trading range in the low to mid 20s where it currently sits. And then maybe we push up that little bit further to some of these other prices, some of these other resistance levels at around $29,000 to $32,000. Why am I picking those levels? Well, let's do a measure from the bottom to around those previous resistance or support levels, which could become resistance. That's 29.5. There is about 34. That's 120%. So to the lower end of these numbers, we're looking at about an 80% move from the low, which isn't unheard of in all of Bitcoin's history, considering this move from the December low to the June top was about 330%. We've also got 100% moves in 2015. So you can see the low to the top being around $300. That's about 100% there. We can take it back to the previous cycle as well, going to some of the other moves out of significant lows after this was a 90% drop. So this low was at $2, going all the way up to $7. So another 260% move. So an 80% move really isn't out of the question. Maybe we need a few more weeks just to hold out where we are. But at 80%, if we're to measure from that low, so that's the first point that we're looking at right here. So it's at 28.5, call it around 29. To the downside, we'll first use 30% drop. So a 30% drop takes us to about $20,700. Let's zoom in so we can see a bit better. There it is right there. So there's your 30% drop. And that is also a significant support level for BTC. Further down, we take it out to 40%, brings us down to the $18,000 level. So that's the level that we've been interested in for significant support if it's to come into the market. I don't really want to see it break much lower if this is to be the low. But if we are to go from 29.5 down to the 50% drop, which the market has done often, then we'd be at it just under that previous low, about $1,000 under that low, because the low there is at 15,400. This would take us down to 14,700. So 50% from that level. So maybe we don't get the 50%, but we get something that we've had in the past around the 30% drops. What about if we look at where the other significant resistance levels could come in, which are around the 32, 33,000. And we also know that one of our major 50% levels, basically the top to zero, so a halfway point, is $34,500. The top was 69, divide that by 2, that's $34,500. So we'll use these low levels here at about 33. Okay, so we're looking at around that mid $30,000 level, draw this line across, and then we measure from 33 down 30 odd percent. That would then put us back to where we currently are. We're at 24K, that'll drop us down to about 23K. That could then become the old resistance could become support if we look to drop around 26% from those levels. Take it down 40%, then we would be looking somewhere around 19,700. I don't see too much going on around that level at the 40% drop. So let's go down to 50% drop, and that would take us back down to around the 16 to 17K level, which could come out just short of 50% and give us some support at the old previous resistance at around that 16.5, 17K level. That's a pretty severe drop from those prices, but we've seen that in the past. We have to be anticipating that. Now, I've only used moves from the low to any of these resistance points to the upside, which basically come out at, if I'm using this low here at 29, it's coming out about 85%. And if I use the other levels at the lows of January 2022, it's coming out about 113%. What if the market was actually able to rally to a 50% level like it has done in the past? What am I talking about? Well, if we measure the range and we look at the low to the high, or the previous cycle high, you can see in the previous bear market to the first running of the bull before the pullback, we hit dead on 50%. Obviously there were wicks, but you can see the close was underneath it for this week. The close was underneath it for the following week, rejected. You can see the close happened to fall almost dead on it the next week, and then the market fell away into that 53% pullback. So that was it ran up to the 50% level from the low. Now, what happened in the previous cycle was that it didn't make it to that 50% from the low before a 30 or 50% pullback. I know I'm throwing a lot of numbers out here, but where it did end up running to once it broke out, you can see this first really, really solid move came up, hit 50, got rejected, and then it went sideways for many weeks. That was about June to the breakout in October. So 3 to 4 months under the 50% level before it broke out again. So a pretty good move there as well. So let's look at 50%. What would happen if Bitcoin was to go from where it currently is and run up to the 50% level? This is a pretty significant move here. So from the low to the 50%, that's at 42,200. Pretty wild to think about that now, but I'm just throwing it out there because this has been support. It's had a little bit of support resistance here in January. It got rejected again in February, rejected a couple of times here with those wicks, only managed a couple of weeks out before it fell under it. And then 42 was also a pretty good level through September when the market dropped to the low here and then held ground at $42,000. There was also the peak back in January. So that was when the bull market just started in January 2021. That peak was almost dead on $42,000. So this could be a reasonable area for Bitcoin to go on a ridiculous run and then have a pullback. I'm not saying it's going to happen in a straight line or in February or in March. Maybe this takes approximately 6 months. Now, I'll come to the 6-month reason in just a moment because we also mentioned at the beginning, how long could this take? But first, I want to have a look at where or how big this percentage move is from the low. And that move is 175%. I'm flabbergasted to even think of this at this point in time, seeing as we're only at 24K, we still need to break through. There's still a lot of bears in the room thinking we're going to go to 10 or 9K. So this seems utterly crazy. I don't know, I'm going to get the comments down below saying it's ridiculous. What are you even doing here? But we're just looking at scenarios for where the move could go and then look at where those pullbacks are, because history has shown that we will get something between 30 and 50% with the odd chance of a 60% drop somewhere within the pullback after the move out of the low. Obviously saying that this isn't 100% confirmed, but this is what we have to use right now. So if we're to get to 42 and we pull back from that point, the 30% brings us down to the previous lows. So that was the previous bear cycle low. This was through that crazy period of 2021 in the middle of the year. 30% would take us out to about those lows there. So that seems like a pretty logical area for the market to run up to and then pull back to. But if we do run hard, then we're probably going to have a bigger pullback from that point because we need to get all the bulls into the market. And that would be your bull trap narrative, meaning that you'd have all of these bulls thinking, wow, this is absolutely amazing. I better buy in because I'm going to miss out on the run. And then everyone buys in at the top again. And then, of course, we get the pullback. It's just the classic manipulation in the market. Then we get a pretty severe pullback so that those bulls get scared out and they drop their Bitcoin and you just get that movement of dumb money to smart money. So the pullback of 40% from that level comes out pretty cleanly at around $25,000. So the previous resistance levels, the current resistance level and that previous top in August. So 40% looks like a pretty good move from that point. But what if we go 50% from 42? Well, we can all hopefully do maths, and 42 divided by 2 is 21,000. Let's see if I'm right there. There's your 21K at 50% drawdown. That would really bring it back to these key support resistance levels back in this accumulation zone. Maybe it's just a wick into there and out the following week. Who knows? But that's your 50% level from the market rallying up to any sort of 50% level. Now, the last one I want to have a quick look at is if we only get back to the 38% level, which is $36,000. Other pretty good resistance levels. Just a quick look here to the downside. 30% is the tops, $25,000. 40% brings us back to this level here in that 21K area, which is also pretty good support resistance. And then a 50% drop. That brings us out to about $18,000. So going through all of these numbers is really just to give us an idea of where this could possibly run and how much we could possibly expect on a pullback should we see a significant pullback. Out of all of this, what I would say is the further up we run, probably the bigger pullback we're going to get. If this happens to be the top for now, then we probably will only get a shallow pullback at these levels. If we do run nice and hard, that's going to suck a lot of people into the market, which then brings in the volatility and allows the market makers, the manipulators, the whales, whatever you believe is true out there, to be able to force their hand at the weaker hands and get that more significant pushback, really because we wouldn't have had the time to build up to that space yet. So moving forward, the idea here is to look at where this top comes in. Once we identify that there's probably a significant turning point come in, like we saw through this period, that took quite a few weeks to play out, then we can start to measure from those tops 30 to 50% of the pullback level, and that could then be our next significant DCA level. So this is where we're all coming to find out a new area of buying Bitcoin, because that was one of the significant questions that I had recently on my Q&A that I did on Instagram. So if you're not following on Instagram, there's a little sneaky plug, Instagram down here and Twitter's there as well. I just did a Q&A saying, what's your biggest concerns with crypto and Bitcoin at the moment? And I'll post up here. There's a lot of questions from people saying, where should I buy in next? How much further will Bitcoin come down? Is it too late? Are we going to see $18,000 Bitcoin again? And it really all depends on where does this top price come in. We've identified several key possibility for resistance levels, and then we can measure to the downside many of these numbers that have come up before, your 50s, your 30% drawdowns, and we would have a pretty good area to identify a new DCA level for BTC. Naturally, the next question that comes up is, well, if it could go up that high, why not just buy it now? You know, if 25 or 24,000 is lower than if we ran up to 42 and then had a pullback, why not just buy it now? That's open to you as well. We haven't had this happen yet. We haven't had that happen yet. And maybe we have this happen next. It's all if, thens, and maybes in the market. If you're looking for certainty, you've got to go back to a 9-to-5 job. If you're looking for weighing up the probabilities, investing is your game. Trading is your game. And so we're just weighing up the probabilities of where these could line up. You know, if they were to come to these levels, what's the probability of the pullback? 30%? Is it a 50% move? What have we seen in the past? And how do we best prepare for that? Which leads me to the timing of these areas of potential resistance for a more macro look. Sure, in the short term, I'm looking for a bit of a pullback or at least a pause in this zone for February, March. So that's within a few weeks. But in terms of the longer scale here, the months here, we've had 12 months down. So this is approximately 12 months, slightly longer. We know it's about 378 days. So to the upside, maybe we only see 50% in time as well. So 12 months, half of 12 months is 6 months. What's November plus 6 months? Approximately May. What have we seen in the past? Well, we've seen a 12-month move. This is December down to December of the following year. There's 12 months. The move to the upside is around 6 months. That's what's happened in the last cycle. So you got December into a June top. So it took half the time to recover half of the move. Pretty interesting how this Gann analysis continues to work out time and time again. Doesn't always have to be that exact half and half, but it's a pretty good target to look at because I can go back to the previous cycle here. Now, this was a longer move to the low. So we can use this low here. So that's 410 days, 13 days, or the 630-day low. There's two lows there. But the main thing I'm going to do from this point is how long did it take to run up to the 50% level? So if you're looking at halfway points, there's 300 days from this low, which took 600 days. So you had 50% in time and 50% in price run up. Pretty interesting stuff here from the Gann analysis, which is why I continue to go on and on about it, as I have done in this video, especially the Gann swing indicator, which you can find here in the video description. That is going to be a future video because this has gone on a little too long. So stick around on the channel, like and subscribe. This is what I'm thinking is happening next, or how I'm preparing for what's happening next should we continue this move up to any of these potential resistance levels of 29K, around 32, 33K, 34 or 36, and then 42. Just waiting to see where that top comes in so that I can then set myself up for the next opportunity to DCA into Bitcoin at a safer level because we've had the pullback. However, if that's not your game, by all means, stick to your plan. If you think 10K is coming, great. If you think 24 is a great number, go for gold. This is all up to you. It's your own individual plan. I hope you found some value from it. If you did, share it with a friend, like, subscribe. I'll see you guys at the next video. Otherwise, I'll see you earlier on Twitter, Instagram, or as a member in TIA. Until next time, peace out.